Hey guys, today we're going to discuss one of the hottest topics in the investing world right now, which is basically Wall Street hedge funds versus Wall Street bets Reddit forums. At this point of making this video, many brokers have actually restricted the purchase of GameStop stock, including Robinhood, TD, Interactive Brokers, and many others. This is one of the craziest stock jumps ever seen, and it's a rare occasion that things like this happen in the markets. It's a remarkable once-in-a-lifetime event that made people millions by leveraging their bets through options contracts. So let's cover exactly what's going on and how people are making so much money and how this is actually even allowed in the markets. So the stock GameStop jumped drastically, hitting nearly $500 per share. Some of you might know GameStop as the company that would give you pennies for your games or consoles you would trade in. Basically the pawn shop for games. GameStop has recently gained interest when Ryan Cohen, who was the founder of the company Chewy, has joined the board of directors. Investors are expecting his position and involvement in the company will bring a rapid transformation to GameStop into an e-commerce giant. Ryan Cohen had also purchased a 9% stake in the company back in August. The reason that investors started piling into this stock was because of a Reddit forum on Wall Street Bets, which got many investors interested in this stock. These investors in the Wall Street Bets forums basically planned to squeeze out these shorts, which were a majority of hedge funds, by all piling into the stock and purchasing shares, which caused a massive short squeeze. A short squeeze is when investors who shorted the stock have been forced to cover these shorts by buying back these shares, essentially skyrocketing the price of these shares. Short selling could be explained by basically the opposite of going long a stock. When you're short selling a stock, you borrow shares from someone else and sell these shares hoping that these shares will fall and you buy them back at a lower price. What also happened here, which makes this stock go parabolic, is there were more people shorting this stock than stocks that actually existed. And if no one wants to sell their stock to these short sellers when they're trying to buy them back, the price just rises exponentially. Another addition to this equation is given the fact that the stock has a relatively low float, so the movements are way more volatile. A share float is the amount of shares available for purchase to the public by investors like you and me. I've heard a lot of people talk about companies like American Airlines and that being the next parabolic move, but because this stock has a relatively high share float, it would be a lot more difficult to get such a dramatic move. Compared to the 50 million share float of GameStop stock, American Airlines has a share float around 500 million, which is 10 times higher, making it much harder for this stock to be as volatile as GameStop. Again, GameStop saw this massive spike because of the large short squeeze combined with the low float, and that basically sums up what happened to GameStop stock. So guys, ultimately you have to be really aware of these different stocks because you could end up on the winning side of the stock or you could end up on the losing side of the stock and actually lose a lot of money. As of today, GameStop stock is down about 50 to 60% per share. And if you were to buy at, say, $500, $600 a share, whatever it spiked up to, you would be down almost 50% in one day. But ultimately, if you were in at the right time and you rode it out, then you could have made a lot of money, and that's what happened. But always know the risk that's entailed of what you're actually investing in, and do a little bit of research on the fundamentals and what's actually happening within the company. And because this was just a massive short squeeze and stuff like this won't happen all the time, so you probably won't be able to make money consistently, but know the risks that are involved and also have a strategy and exit plan when you're investing in these stocks, because you want to stay with investing and stick to this long term and actually understand what you're investing in. So if you guys enjoyed this video, make sure to hit that like button. And if you have any other further questions, make sure to leave them down in the comments section. Always remember, guys, invest in what you believe in what you understand. Thanks again for watching.